it's a strategy called Profit First, which you may have heard of. It's a pretty well-known strategy. I didn't make it up. There are other names which kind of use the same general concepts of Profit First, the envelope method, Rich Dad, Poor Dad. He talks about it in that book quite a bit. Essentially, paying yourself first. Yeah. And essentially, what we do is we label every dollar that comes into the business bank account.
The only podcast that it will help you grow personally, professionally, and financially. Good morning, good afternoon, maybe even good evening. Welcome to another episode of the Growth Talk with Glenn, the podcast where we delve into the world of business growth, profit maximization, and innovating strategies to enhance your entrepreneur journey. I'm your host, Glenn, and today we have a phenomenal guest who's been transforming the financial landscape for small businesses owners across the globe. With over 8 million euros. Would that be fair? Is it euros or dollars? Money's money, right?
It's pounds, but you can say
pounds.
Yeah, it's
perfect. With over 8 million pounds added into profits to his clients' businesses, Tom is here to share his expertise on increasing your profits and cash flow. Tom, welcome to the show.
Thanks for having me, Glenn. Pleasure to be here.
You're very welcome. If you don't mind introducing yourself, Tom, who are you? What is that you do? And who do you help?
Sure. So, essentially I help small business owners use their numbers so that they can make better financial decisions for their business, improve profits and cash flow, and then achieve their goals from the business and the reason they started the business in the first place.
And what would be one of the main things that you focus on when you come into a business? Like, what's that one thing that you already know? Okay, I'm going to look into this first.
There isn't one particular thing. It would be a case of basically getting clear on where the business is at now. So diving into the finances and getting a really clear picture of essentially all the key numbers so that we can have a really good understanding of what's going on in the business at the moment and highlight any potential problems that they're having.
I love that. Would you mind sharing like what inspired you to become a financial guide for small business owners?
Yeah, sure. So I have a background in finance. I worked in banking for about 8 years, and I left that about 3 years ago to basically do my own thing. I wanted to kind of live and work remotely for a while and run my own business. And then whilst running my own business in that period, I had people in my network, mostly old friends, kind of message me and ask me for help with their business finances. Some pretty specific things like how to do mergers or acquisitions, others on how to sell the business, others on fundraising, and then some with what I would consider the basics. So keeping on top of the numbers and then using the numbers to make better financial decisions. And what I basically noticed was that there must be a lot of other business owners in this same position where they're just kind of struggling with the basics, struggling to understand the profitability of the business and struggling to know what to do next. So I kind of focused on that. And I mean, it's no surprise that there are a lot of business owners in that situation because generally people start a business because they're good at something. So they have a craft, like builders are good at building, so they want to start a construction business. Dentists are, dentists, so they want to start a dental practice. And they start a business so that they can do more of their craft and not because they necessarily want to get stuck in the numbers and understanding, cash flow and profits. And so that's when I find that things often get held up a bit for the business owner. It's because they're focused on their craft and not growing the business in a healthy, profitable way.
You mentioned something about basics, right? Like how important is because I seen this all the time, like people get into business because they're passionate about something and they're good at it, but they don't have the knowledge in the financing or maybe on the systems and process. How is it important to at least have a basic financial knowledge, right? In order to grow your business. How important is that, Tom?
Yeah, I would say it is important to understand the basics. You do have to understand what is driving revenue, what's driving profits, and what's driving cash flow. So either the business owner has to get into that detail and understand it themselves, or they have to get someone to help them. And either one of those options is fine and solves the problem. but it has to be one of those. You can't do neither, because if you do neither, then what, like I said, what generally happens is, a year or 2 years down the line, the business owner realizes that they've actually just created themselves a stressful job and they're stuck. And actually, one of my clients said to me when I first started working with him, he runs a sports hospitality events business.
Mm-hmm.
And he said, I've been running this business for 5 years now, and I've been paying myself the bare minimum for this whole time.
Mm-hmm.
And I've got nothing to show for it because the business isn't worth anything. And I've just been incredibly stressed this whole time, barely been able to pay myself. And I may as well have just got a job instead, because it would have been less stressful. I could have paid myself more. I could have gone on more holidays. And so that's not an uncommon situation for business owners to find themselves in. So, but the point of this is that there is a solution, and the solution is that had that business been run with a focus on making the most appropriate financial decisions from day one, then the situation could have been entirely different now.
Now that you mentioned that, Tom, what is the most common financial mistakes that you see business owners make, and how can you avoid them if it's possible?
Yeah, good question. So the most common mistakes that I see are spending too much, being distracted by shiny objects, not measuring the numbers, not really knowing where profit is coming from. So if it's a bigger company, being broken down by different products, not knowing which products are generating more revenue, not knowing how much you make on each client or how much you make on each sale, and then not knowing how much of your profit is actually turning into cash. So how much you actually make from each sale in terms of cash. So for example, if you have a $1,000 sale, you make $200 in profit, but you never collect the money from the client, then technically, on the profit and loss, until you write that off, you've made a profit. But actually you haven't collected any cash, and you end up losing money. So actually collecting cash is vital, and then measuring it all properly so that you understand how much cash you've actually got is incredibly important. And then no systems and processes, the business owner trying to do everything themselves, focusing on the wrong things. And really, step one is to become aware of what these issues are and become aware of whether you're doing them. And then step two is to take small actions, little by little, to make progress in the right direction. So it doesn't have to be an overnight fix. And for the most business owners, it's not possible to have an overnight fix, but a little bit by bit, moving in the right direction. Yeah. And by focusing on essentially the process that I go through with my clients is, number one, we get clearer on the numbers. Where are we now? What's happened? Number two, what's working or what's not working in the business? And then explaining it to the business owner in very simple terms with color codes like red, amber, green, to show them, these are the different parts of your business. These parts are working, these parts aren't. And then more importantly, what to do next. Okay, so we repeat that process every 30 days or so. And the result of that process is that the business owner is always focusing on the most pressing issue, or the most important issue in the business, or the most important thing in the business, so that they can achieve their long-term goals. Okay, so by always focusing on the most important thing, what happens is the business owner naturally gets out of the day-to-day and gets out of the weeds of the business and stops kind of trying to spin too many plates at once. And they focus on just the most important thing, or two or three things every month.
So let me ask you this. You mentioned that one of the biggest mistakes, they spend too much, right? But then a business owner has to, especially when they're starting, they have to wear many hats. They got to do most of the stuff. Now, when it comes to start delegating, whether it's with a VA or hiring somebody, when is that point that you say, you know what, you are in a point that you can start hiring, and it won't be like spending. It's almost like investing in someone to come in and run those and start delegating. When is that point for you, Tom, with your expertise?
Yeah, so it really varies. It really varies, and there's no kind of one size fits all. But the general process would be, now I do this for my own business, I do it with my clients as well. At the point where something that is relatively basic and repetitive can be done by someone else, is taking up your time and could be done by someone else, that's the point when you should start. So for example, if you have daily processes which are actually pretty repetitive, that you can actually turn into an SOP, create a Loom video and explain to somebody else how to do, and then hire someone else to do them, then that's the point that you should do it. Yeah.
Perfect.
When the business would allow you to from a cash flow perspective.
From the cash flow perspective. Perfect. In the password and also in your bio, you mentioned a 3-step framework for increasing profits without increasing revenue. Could you walk us through that framework?
So the framework is essentially as I just mentioned. So the monthly process is going to be get clear on the finances, get clear on what's happened and what's happening, understand what's working and what's not working, and then make decisions based on that so that the business owner is focused on the most important things every 30 days going forward. So that's the general framework. But in terms of the specific kind of methodology, if you like, for helping business owners keep more of what they make, back to the problem that I said that one of the business owners face is basically spending too much money, not knowing where the money's going. It's a strategy called Profit First, which you may have heard of. It's a pretty well-known strategy. I didn't make it up. There are other names which kind of use the same general concepts of Profit First, the envelope method, Rich Dad Poor Dad, that he talks about it in that book quite a bit. Essentially, paying yourself first. Yeah. And essentially, what we do is we label every dollar that comes into the business bank account. So we then have different accounts depending on what the money's for. So we might have an account where all the money comes in, and we use that account for the general expenses of the business, or we can move them to another account and then use that money for the expenses of the business. We have another account for tax. And basically what this does is, and you can open as many accounts as you want, as many or as few. I would recommend just starting with kind of 3 or 4, get the system implemented and get familiar with the process. And yeah, essentially what this does is it makes sure that you don't spend money that isn't yours for a start. A lot of business owners find themselves having to pay last year's tax bill with this year's revenue, which is a nightmare, and it causes big cash flow issues. And so this is the first thing that I often recommend that somebody doing that does. And that client that I mentioned earlier, actually Reese, it's exactly what we did for him. And essentially it means that you're not using that money to do that. And what happens is if the business is having cash flow issues, then it forces the business owner to use the money that they have available for the operating expenses instead of spending all the money that isn't theirs. So it forces the business owner to be much more careful about what they're spending money on. So that's the first thing. You can also, that exact same methodology, you can apply it to putting some money into what we call a profit account for the business owner. So this means that instead of leaving $100 in the business bank account or $100,000, whatever the numbers are, you can put 20 of that into a separate account called the profit account, and then you've got 80,000 to run the business instead of 100, and it forces the business owner to run the business more efficiently. So all of a sudden you start looking at your expenses and you think, do I need to spend that? Do I need to spend that? And you cut what you don't need.
I love that. So if I understood right, one of the recommendation is to have a main account. From that main account, you put aside whatever you're going to be paying on taxes, your business expenses, and also your profit account, right? So what percentage you typically, Tom, with your experience, what would be the good recommendation of percentage to take out for your profit? And then you have the rest for taxes and operating.
So again, it really varies depending on the size of the business, the sector, the profitability, a lot of variables. So I can't give a one size fits all, but what I would say is start small and just get familiar with the process. And I would start with 1% going into the profit account. I can't give a number for the tax account because that varies depending on the person. But yeah, get into the habit of every dollar that comes in every Friday morning. Check the account, look at all the money that's come in that week, and put the money into the relevant accounts.
I love that.
Repeat the process every week. So you're following a simple process, and what it means is that you can log into your bank account any day of the week. You can look at how much money you've got in each account, and you basically know where you are. Mm-hmm. So you don't have to get stuck into the accounting software. You don't have to understand profit and loss statements or income statement or balance sheets or anything like that. You can just look at your bank account and know pretty much where you are. And then as long as you've also got a clear understanding of what's coming in and going out over the next, few months, then you can foresee any problems before they come up on you, rather than having all your money coming in and out of one account, and then being faced with a tax bill and having to struggle to pay it because there's not enough money in there.
Yes. I usually do, I currently do 40% of everything. Like I put my 40% in my, you call it a profit account, I call it my wealth account, and then I put
Yeah.
them to work. You mentioned a few different terms, right? Because you as a in the financial industry, you know all the terms. Now for business owners or individuals or entrepreneurs or even employees, it gets technical, right? Once you throw those terms. So in the most easiest way, how can a business owner get clarity on their financials and determine, okay, this is working, this is not working, without getting too technical for them to understand?
Yeah. So good question. Anyone can do this today. So every business owner, doesn't matter what the size, should have a bookkeeper. Okay. And they should have accounting software that keeps track of the numbers.
Mm-hmm.
Okay. So for many small businesses, it's QuickBooks. I'm not advocating everyone uses QuickBooks, but for a lot, it's that. Very easy to log into the account, and go into the report section, go into the profit and loss, pull a profit and loss and view it by month for the last 2 years. And then basically just go through that profit and loss, look at the different categories. So if you look at revenue, this is your sales, look at all of your expenses broken down into payroll, marketing, and other expenses.
Mm-hmm.
Okay. And what you can do is if you create a row on the Excel spreadsheet that you export the numbers to, you can turn each of those numbers into a percentage. Okay. And you want to turn them into a percentage of revenue. Okay. So then you can see cost of sales as a percentage of revenue. You can see marketing as a percentage of revenue. You can see other expenses as a percentage of revenue.
Mm-hmm.
And what we want to do is we want to look at the trend of those numbers over the last 12, 18, 24 months, however many months you chose to do it for. Okay. And what that allows us to see is trends or themes in the business. And then we can look at the trends and themes and think, does that make sense? Is that what I think happened? Cost of sales went up. Is that what I thought happened?
Mm.
Oh, that makes sense because the cost of labor went up or whatever it was, or the cost of raw materials, whatever the reason was. And we can basically do a sense check.
Mm-hmm.
And then it's a case of being like, okay, this is where we are now. Which of these numbers can I improve? So let's say payroll is, let's say payroll is 10% of overall revenue or 15% of overall revenue. Do we want to look to increase that? Or is that okay where it is? What are the industry standards? Am I paying more or less than my competitors?
Interesting.
And then let's say we want to increase revenue. Well, what drives revenue? It's the number of leads. That's where it all starts. Conversion rate leads into sales.
Mm-hmm.
The number of repeat purchases of a client within a year, and the retention rate. So how many of those clients come back the next year? And you can break that into a couple of different numbers depending on the business, but generally speaking, you can break it into those two numbers. And then the average transaction value. So let's look at those numbers and work out which ones we can improve to increase revenue. So like lead conversion rate, is that low? Could that be higher? Is that in line with my competitors? Or is the average sale value on the low side, and we could easily increase that, and it would improve things. So I'm speaking in quite general terms. Obviously, it depends on the business and it depends on the industry and the size. But generally speaking, that's the process. Yeah,
I love that because it's all data. You once you have numbers don't lie, and you mentioned you can go back up to like 2 years and see the trends and repeating transactions, the value of the customer. A lot of people they don't even know the value of the customer on a monthly basis, on a weekly basis, on a yearly basis. So data, it's all data. Track the data just to see what's working and what's not. I love that. Tom, if you don't mind me asking, what has been the hardest challenge that you have to overcome in your career, and how do you did it, and then shape your approach to financial guidance from that challenge that you had?
Yeah, good question. So for me, when I left the corporate world, I didn't realize what I was leaving behind at the time, but once I left and I was over the kind of excitement of, wow, I'm kind of on my own and I can do whatever I want, I realized that I didn't have that massive support network behind me. So I didn't have my team. I didn't have all the resources. I was at a big investment bank. There was a huge amount of resources behind me, training, people to speak to, people who knew a huge amount as well, with a lot of experience. Didn't have access to any of that. So all of a sudden I was on my own, basically had to figure it out for myself. And that was tough. And then, so that in terms of the support network, but also the loneliness aspect, in that I was in it on my own, had to figure it out on my own. And so that was challenging. Yeah, for sure.
I bet because that's was it worth it, the risk?
It was worth it, 100%. Yeah. So I live and work remotely now. I have a base in London, so I am in London most of the time. But I keep most of my meetings on Zoom. Nowadays, people generally just want to meet on Zoom anyway, so it works perfectly. But I do travel around a bit. And yeah, it was worth it.
I love it.
And the impact I'm having on the businesses that I'm now working with, I make a big impact with pretty much every client that I work with. And it's very clear to see, improvements in their stress, improvements in their financials. They're able to do things that they weren't able to do previously just because of some advice that I'm able to give, which frankly comes quite naturally to me, but to others it doesn't. And so that's the real benefit. It's the impact that I can have on a lot of small business owners.
I love that. I love that because sometimes we really want to do something. We want to leave the corporate world, and it takes a lot of commitment, discipline, and risk. Lots of failures in order to be successful sometimes. Not always. Sometimes. In your career, Tom, who has been the most influential person in your professional life? That is like, man, this person got into my life. It was a great mentor. Who would that be?
Yeah, good question. So probably someone no one's heard of. So I won't name drop. But someone who helped me basically build my current business, who had done it previously. So yeah, essentially when I first left my job, I was providing different types of advice, kind of mergers and acquisitions, selling businesses, fundraising, that sort of thing. And then it was becoming focused on what I now do that this mentor helped me with. So, he was able to give me a very clear path of what to follow and how to set this up for success. And yeah, I mean, the results have been tremendous, and things are going really well. And I'm, like I said, I'm having a big impact on the clients that I'm lucky enough to work with, and looking to basically maximize the impact now.
Did that happen by nature, Tom, or is that something that you were planning? Man, I need some guidance. I need to hire somebody. Did that happen by nature, or you actually hire somebody to do that to help you?
It was a bit of both. I met him kind of organically through my network, and then I worked with him as a mentor. Yeah.
I love that. Do you saw value on that? Did that help you? Like, if anybody out there listening and they might be stuck anywhere in the business or personally or financially, would you recommend to get a mentor?
Yeah. So at the end of the day, you either pay with time or you pay with money. So I could have tried to figure it out on my own, and I would maybe have never figured it out, or it would have taken me 3 years. But instead, I was able to fast track that process massively. Yeah.
I love that. So it could be a major shortcut to pay somebody to show you a blueprint type of thing. I love that. Tom, if you could give one piece of financial advice to every small business owner out there, what would that be?
It would be to get on top of the numbers, review them every month, and then use that information to make decisions going forward. So all businesses are made up of the same 16 parts. Doesn't matter whether you're Uber or Amazon or a one-person band on a high street. All businesses are made up of exactly the same 16 parts. So for your business, get familiar with those 16 parts. Each one is a number. Understand what that number is. And you can use the exercise that I mentioned previously to understand how that number has been changing over the last 12, 18, 24 months. But get clear on what that number is now, and then use that information to work out what to do next so that you can improve just one or two of those drivers every 30 days. And if you do that and you repeat that process and you focus on the most important driver every 30 days, then the results over the mid or long term are going to be tremendous. And so that's what I would recommend. And so in terms of actually getting seeing what those 16 drivers are, there will be links somewhere around this video, which has a link to a page where you can download a report that has those 16 drivers. And like I said, they're the same for every business. The report explains clearly what all those drivers are and how to calculate them.
I love that. Out of the 16 drivers, Tom, what is your top three that you say, man, you got to start with this top three right here? What would that be?
Yeah, my top three are actually the revenue drivers. So lead generation, lead conversion rate, and then average transaction value. Because without that, then the rest of it doesn't matter.
I love that.
Yeah,
I love that. Tom, I really want to say thank you as we come in close to the end of the podcast. Anybody out there wants to reach out to you, want to get into a discovery call, get to know you, how can they do that?
Yeah, so what I would recommend, go for the 16 drivers free report that I mentioned. Download that. My email address will be on there. You can also connect with me on LinkedIn, or you can visit my website, and there'll be a link on there to book a call with me directly.
I love that, man. Thank you so much for your time, knowledge, expertise. Every single, at the end of every single one of these podcasts, I like to close with a quote. Would that be okay with you?
Sure.
From page 9 to 85, you pick a number, Tom.
12.
12. Here we go. For the business owners out there, if you really want to increase your cash flow, it has to be some action, right? Behind all your efforts. So the right level of action is massive action. So when you take massive action with the right information and you're tracking everything like Tom has been sharing with us for the past 30 something minutes, you will get massive results. It's that simple. The right level of action is massive action. Everybody out there, I want to say thank you, Tom, for your knowledge, for your time, for your expertise. Wishing you the best of success, health, and wealth. And everybody out there, do not forget to become the best version of yourself every single day. Tom, thank you so much for your time. I'll see you on the next one.
Thanks, Glenn. Thanks again.
You're very welcome.